The things that we're looking at when it comes to this market is one, value metrics that you and Mike were discussing earlier. We see a tremendous amount of value developing here in the marketplace. But the other piece of it is we have to remember the role that fixed income plays within investor portfolios. And so we've been watching asset markets, and as those asset markets evolve, and you've seen.
Okay, traders, great. Position opened on Bitcoin, short. We opened short position, right? Okay, we bought short contract. Well done, anybody who decided to sell short Bitcoin. Well done. Just to remind you that based on the Bitcoin trades, we don't make profit based on the pips. With Bitcoin, we make profit based on percentage-wise. So 0.1%, 0.2, and so on, 0.3, and so on. Okay? This is a bit different to pairs, Forex pairs, because Bitcoin provides us quite a wide spread, and it's kind of difficult to put pips-wise stop on profit. And other things, if I will put just a couple of pips profit, it won't be much profit. So we will calculate profit based on percent, how much percent we will make. Okay? I'll speak to you later. Everybody who entered this trade, well done, good for you. Look what's happened. It moved already down. So let's follow this trade. Speak to you later, guys.
And the growth in the that we're seeing in the economy, I think it's going to be well supported. Having said that, I think this backup actually affords a lot of return available for investors that want to take some chips off the table. They've made a lot of money on the equity side, and so sitting here in Q1 saying, "Hey, I'm going to take some chips off the table in case there is a hiccup down the line," makes a lot of sense.
How would you approach that question, Mike?
Yeah, we still like high yield, and we have taken down our overall level of credit risk on the margin here, Jonathan, over the last few weeks. And it's really a function of what we were just talking about, the tighter financial conditions. We're worried, like, how do these higher rates resolve themselves, right? One is just valuations become so compelling that investors jump back out on the curve. And it's not just retail investors going from loans to high yield, Jonathan. It's the big institutional investors, the insurance companies and pension plans. And we're already starting to see pension plans rebalance out on the curve, right? They are, their funded status has really improved with equities going up and interest rates going up. So they are definitely incentivized to rebalance. The other way it resolves itself is through, a risk-off environment that causes the Fed to step in and maybe start buying or at least jawboning long rates lower. And I worry about that risk-off environment that resolves these higher levels of rates.
Ashish, I wanted to go there on how you offset potentially some of these moves. And on the rate vol side, one thing that you guys have been doing, and many others too, is really focusing on your foreign exchange exposure. How are you managing that dynamic at the moment, Ashish?
Sure. So we've been taking a pretty light view of FX risk in our portfolios. We just think that there are a lot of points of opportunity in the rate curve and global rate curve, and that FX isn't offering nearly as much kind of opportunity. That'll open up. You see the moves that we've seen today, added volatility in the EM space. As kind of that space plays out, we think that there are a lot of opportunities that are going to develop on a forward basis.
We're talking about the short-term issues here, potentially the medium-term issues too. I want to finish on a longer-term issue with you, Mike, and it's a thought about the length of this cycle and potentially the possibility that the Federal Reserve just never raises interest rates through this cycle. Mike Collins, do you think enough people are thinking about that at the moment?
I don't think anybody's thinking about that, Jonathan. As you know, we think that the reasonable probability, I talked about what's priced in now, which is the Fed's perfect world, right, of permanent higher growth and inflation. And I worry about the other scenario. Remember last cycle, it went on and on and on. I kept thinking, when are they going to hike? If they don't hike soon enough, they're not going to be able to hike. And this cycle, the reaction function is going to be even slower. Yeah. So there's a really good chance we're sitting here in 3 years from now, they haven't hiked and the economy's rolling over. and they get stuck at zero like a lot of other central banks.
Like Europe, like Japan. Guys, you were great together. Let's get you back on soon. Ashish Shah, it's good to catch up. It's been way too long. Alongside Mike Collins, thank you. Coming up on the program, the analyst action you need to know. That'll be next in our morning calls. And later, travel stocks feeling the heat over in Europe as vaccine tensions continue to build. That conversation still ahead with TPW's Jay Pawlowski and Washington Crossing's Kevin Karen. This is Bloomberg. A little more than 4 minutes away from the opening bow this morning. Good morning. Futures up 7. We advance 0.2%. Let's get you some morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin with B of A, downgraded Snap to neutral, $67 price target. The analyst citing valuation and rising interest rate concerns. Your second call from Evercore, upgrading Dollar General to outperform. The analyst signing a number of near-term catalysts, including the American Rescue Plan and the company's margin expansion initiatives. And finally, Benchmark, raising its Viacom CBS price target to 120. The analyst expecting the media company to exceed consensus estimates, with tailwinds stemming from its streaming video service. We advance there by 0.7%. Up next, the reopening trade back under pressure. From New York City this morning, good morning. This is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything. Cash. $4 trillion of cash. One of the most notable aspects of this report that was stellar.
"25 seconds away from the opening bell. Looking to snap back here on the S&P 500 futures, slightly positive. Your outperformance on the Nasdaq up 0.7%. You are familiar with the story by now. Bond market does its thing, Nasdaq does its thing. Is it correlation or causation? We'll talk about that in a moment. There's your opening bell. Switch up the board into the bond market. What a range on 10s. 174.77, the high of Friday's session. The low of today's 166. What's it all about? Your 10-year, 168.75 right now, down 3 basis points. Your euro, firmer, euro dollar north of 119 at 119.20. And crude up by 0.4% to $61 and about 70 cents. So that's the cross-asset story at a market desk with your movers. Let's get back to the wonderful Kriti Gupta.
Well, good morning, John. Let's just kick it off with some vaccine news. You are seeing the AstraZeneca trial in the U.S. show a 79% efficacy rate. Of course, we know that's coming off the back of those concerns over in Europe. That actually helping the shares today. Also in the green, Kansas City Southern rallying after Canadian Pacific Railway agreed to buy them for $25 billion in a deal that would link the U.S., Mexico, and Canada via a 20,000-mile rail network. Also in the green, Tesla, ARC Management putting a $3,000 price target on the stock, indicating a company value of, get this, $3 trillion. In the red, previously, now in the green, was Apollo Management. Leon Black stepping down from his chairman role in addition to giving up being CEO. I also want to take a look at Airbnb. Those analysts saying staycations will become more likely and people can work from anywhere. That giving those shares a little bit of a boost. GameStop also rallying ahead of their first earnings report tomorrow since the Reddit mania began. And in the red, that is Turkcell, the dominant mobile phone operator in Turkey. Its ADRs under pressure in line with the drop in Turkish assets after its central bank chief was replaced, John.
A brutal move in Turkish assets. Kriti, thank you. Let's start with the equity market then. Up 0.1% of the S&P 500, about 90 seconds in. Your underperformance from energy, from financials. The banks, the financials off by 0.6%. The Y in the bond market for the banks at least, that's for sure. The rotation, that's the story. It's dominated this program now for months. On top of that story, here's Taylor Riggs.
Thank you, John. And we take a look at NASDAQ 100, right? The big outperformer today as we advance, as you say, 0.8%. Interestingly enough, in the last 5 days, we're still up more than 5%, even as yields have climbed 10 basis points in that time period. It is the rate of change at which those bond yields move that allow big tech to digest what that means for valuations. Let's flip up the board. This is interesting. Tech relative to the S&P 500 looks near the late 1990s bubble, but Goldman Sachs coming out today and saying, well, tech has been the big outperformer, but fundamental earnings per share also look very strong. And so they think that we are nowhere near the extremism that this ratio shows going back to the dot-com bubble. Finally, if it goes up, some days it goes down. And today, of course, it is that reopening trade, despite some of the positive news that we're getting from AstraZeneca. Concerns still over the cruise lines. What does summer travel look like? Concerns over the airlines. Do we get international travel, or do we continue to see some infighting between the UK and the EU? So you are getting some concerns about US airlines following some of the European shares lower today.
After massive moves. Taylor, thank you. Taylor Riggs there on the equity price action and this rotation that's just dominated the conversation on programs and networks like this one. Joining us now, TPW's Jay Pawlowski and Kevin Karen of Washington Crossing Advisors. Kevin, let's start right here. The equity leadership came from one place for the last 10 years. We've seen a change over the last 6 months. Kevin, does it stick?
Well, I think valuations are an issue. So for us, we've got the growth side of the equation at kind of the lowest expected return long-term than that we've ever had. The caveat, though, is that growth, tech, for example, very high quality balance sheets, very high strong cash flows. They've become a very good place for a core holding for a portfolio, but they've gotten expensive. So there needs to be a period of digestion, and that's why you're seeing this rotation out of low expected return growth stocks, which are expensive, into value. And of course, we've got a steep yield curve and better performing commodity prices. So for now, that seems to be the trade that's in place, and that's where we're overweight growth over value.
Multi-year move away from growth towards value. And I'll give you a triple play, John. The first is the fundamental case, which, as you know, I've been arguing for months. Vaccinations plus rising rates equal kryptonite for long duration growth stocks like big tech. Secondly, you have the technicals starting to suggest that long-term equity leadership is moving away from technology towards energy, financials, other value, cyclical plays. And then third, and I think very important, you have the quantitative side where JP Morgan and others are making the case that the momentum factor, which has been paired with growth for the last decade, as that chart just showed, is now migrating towards value. And I think that's going to give us the next leg up. So to me, we're in the second inning, maybe the third inning of a move towards value that will continue, as I said, through this year into next year and beyond, not only within sectors in the United States, but also geographically in a shift of leadership away from the U.S. to the non-U.S. market.
So, Jay, you and I will talk about the international story a little bit later in the program. Can I pick up on the first point first? Mohamed El Arian out on Twitter today raising the question that we've been talking about in this program too, the difference between correlation and causation when it comes to the NASDAQ and when it comes to the rate story. Jay, is that correlation or causation? And the reason I ask the question is because the correlation is clear. As things reopen, as growth looks less scarce, yields should go up, the NASDAQ should fall. Now, Jay, does one inform the other? Is there some causation there as well, or is this just a reinforced narrative of the last several months?
I think it's actually both, John. I mean, I think you have a case where clearly long duration growth assets suffer from rising rates. We are in a bear market, a secular bear market for U.S. Treasuries. Rates are going to go significantly higher. That's a good thing. We're getting off the zero bound. It means growth is recovering. It means consumer confidence is coming back, et cetera. And also you have the relationships. I mean, markets are built on relationships, on correlations. Yeah. And it's very clear how this is going to play out. It's been to the benefit of technology in the United States for the last decade. And now guess what? Other sectors which have been beaten down, nobody owns, no one's liked, they're cheap relative to history, regions no one's liked for years, now we're going to get a chance to enjoy the spotlight.
So, Jay, some people might say, why does it matter if it's correlation or causation? At the moment, the outcome is the same. The reason I ask, Kevin, is because at some point, let's play this out. Let's say that the yield move tops out in the way of Michael Collins of PGIM talked about earlier on in this program. I'm trying to understand that if the yield move tops out, whether the rotation can continue without the participation of the Treasury market. Kevin, do you think it can?
Well, at some point it's going to become an issue, and specifically if we move, let's say we get the Treasury up above 2% to 2.5%. I agree with the other guests. We're going to have some very strong headwinds, especially for growth, and a lot of that shift that we're seeing into value is a defensive move away from concerns of problems potentially in growth as rates move higher. And then when you think about how banks finance themselves, for example, a big part of the value part of the equation, or energy stocks doing well, or even emerging markets as a proxy on value, because there's so much weight in commodities and materials and banks in emerging markets. You're going to continue to see this almost defensive trade. But ultimately, if the Fed, who is now using pro-cyclical monetary policy at a point where you've got relatively high asset prices and an economy that's roaring back, you could end up with some headwinds at some point for value. We don't think we're there yet. So the other thing you got to pair with this value idea is the idea of quality. So we want to own value, true, but we want to look at the quality of the companies that are in there and make sure that we're not exposed to, let's say, too much leverage.
Let me come back to the same question again, Jay, and let me put you on the spot just a little bit, Jay. Can the value outperformance continue if the Treasury sell-off stabilizes? Okay, guys, are you ready to place stop on profit for Bitcoin? That's great. So the price, I'm looking 0.2%. It's equal 57,320. So this is where I'm going to place a stop on profit for Bitcoin. So whatever happened, we will have 0.2% profit for Bitcoin. Okay? Look, it nicely moved down, so I don't have to worry much. And probably for you guys, because spread quite big, you don't have to worry that you will not be able to place stop on profit. So as you can see, at this moment, we have stop on profit at 57,320. Let's see, 57,435 minus 1%. It will be 56,860. Let's go to 0.5%. 57,435 minus 0.5%. It will be 57,147. What about, okay, that's fine with me. Don't forget, guys, that we trade in not because we love stocks. We love stocks because they give us a profit. So we don't like to stick to one pair of stock because they're great. They are great always when they give us a profit. When people lose money, they don't really like them. Yeah. So we placed right now, we moved down stop on profit to 57,147. As you can see, I pointed out. So please do copy this trade. If you decided to follow my trade, don't play hero, don't hold like forever this pair, because anything can happen, especially with Bitcoin. So I advise you to, if you started following this trade, please finish following until the end this trade, okay? If not, if you have the strategy, you already know what to do. If you don't have the strategy is available on company.co.uk website. You can get the strategy. On Wednesday, after tomorrow, I'm going to have a webinar. You can register for webinar. I will spend 1 hour. A strategy will be included, and I will show you how I trade, what exactly you need to do, how to hedge stocks, how to do all tricks that I know in order for you not to lose any money. If you want to trade, of course, as a full-time day trader. Okay, guys, so we already, whatever happened, we're already 0.5% in profit for Bitcoin. I'll speak to you later. Stay safe.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse. Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP. But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
The vaccine is highly effective and very safe. We are very confident. Many regulators are very confident. The vaccine has been approved in more than 70 countries in the world. And our next priority, of course, is also to get this vaccine approved via an emergency use authorization in the United States.
AstraZeneca getting a vote of confidence from US trials with tensions brewing over the shot on the other side of the Atlantic. Let's head to London to catch up with Bloomberg's Guy Johnson. Guy, I spent the weekend trying to get a read on this. What's your read on what on earth is going on now?
The UK is racing ahead with its vaccination program. Nearly 50% of the population now vaccinated. That is extremely painful for EU leaders, as a result of which, John, there is a Thursday summit, now virtual, because of the rising case counts, to discuss maybe banning or limiting exports of the AstraZeneca vaccine to the UK. There's a mix of politics, nationalism, and science involved in all of this, John. It is hoped that the news out of the Astra trial that you were just mentioning in the United States will calm nerves surrounding the science and what is happening in the EU regarding the Astra vaccine. But nevertheless, with case counts climbing, lockdowns climbing, John, the EU needs to figure out a way of getting more shots in arms, and it needs to find a way, I suspect, in Brussels from diverting attention. Potentially starting a fight with the UK may provide some options there, but the potential for a lose-lose situation is already there as well. The UK does produce key ingredients, for instance, for the Pfizer-BioNTech shot. That could be limited. Boris Johnson over the weekend, according to the BBC, did speak to Merkel and to Macron. The hope is that this could be diffused, John, potentially with some deal on sharing out of a plant in the Netherlands. But nevertheless, there is still the threat this week that we could see a vaccine war break out between the UK and the EU, which I think would be highly damaging to both.
Well, Guy, let's talk about that. Do you have a sufficient understanding, you and the team in London right now, as to what would happen to supplies for the UK over the next several months if the EU went through with this?
It would have a meaningful impact. It would certainly push back, according to the Affinity data, the point at which the UK reaches its target for vaccinations by a few weeks. It would impact, according to the Affinity data, the EU by just 1 week. I would improve the situation by 1 week. But the danger, John, is that it then spreads into other areas of the supply chain. This is a global production process. The UK, for instance, produces key lipids, fats, that are used in the Pfizer vaccine, and I think the unforeseen consequence here could be quite significant. I think it would also be just damaging politically to both's reputation around the world, and I think that needs to be taken into the thinking here. Certainly, the Irish and others within the EU are keen that this doesn't happen. But with, as I say, lockdowns increasing and case counts and fatalities increasing, EU leaders are under considerable pressure, John.
Guy, no doubt you'll be leading with this near the top of the hour with Kaylee Lyons. Looking forward to the coverage coming up in around about 13 minutes or so. Let's turn to this story of Europe versus the rest of the world, and not on the pandemic and not on the vaccine, but in the markets. This is a story coming from JP Morgan, calling for Eurozone outperformance and writing the following. The key consideration for the regional pecking order is the value growth tilt. Given the US bias to tech and Eurozone bias to value and banks, if banks are performing better than tech, then the Eurozone has a fighting chance to outperform. TPW's Jay Pawlowski is with us right now. Jay, this is your trade. Why does it stick? Why is it durable?
Well, I think, John, exactly as you just pointed out, people are starting to see the light, as it were. And, you know, it's a good thing that as investors, we're investing in companies and in earnings streams and not in, you know, political decision-making and other issues as you raised before. Look, I think there are three main divergences between the U.S. and within Europe and between Europe. First is the vaccination lack of success. The second is the divergence between growth recoveries. And the third is within the EU between manufacturing, which has done quite well, and services, which clearly have not. My view is that we are at the wides of all three of those divergences. And as they narrow, that's going to be bullish and support an already pretty encouraging earnings profile and valuation profile for Europe and for the banks.
Jay, it's been intriguing for me to witness that divergence that we've seen and the narrowing that you expect. Typically what we'd expect to see is the divergence and the markets respond to that. The only channel I can see that happening right now is through FX. Euro-dollar's come down from 123. I think the lows were in and around 118.50. Jay, I haven't seen it in the banks trade. Banks have carried on ripping. Haven't seen it in the travel and leisure trade. That's done very well over in Europe more recently. So, Jay, can you help me understand that a little bit more? We've seen the growth differentials and the expected growth differentials, arguably in your mind, peak, but we've already seen the trade for narrowing start to develop over the last several months anyway.
Yeah, that's correct, John. You're absolutely right about the currency. Look, U.S. exceptionalism in terms of better vaccinations, better growth recovery supports the dollar. Global reflation, which would reflect a European recovery, is bearish for the dollar. So I would expect exactly what you just said to kind of reverse itself. And by the way, that gives this whole trade another leg up, and the currency will start to work for you as opposed to against you. And John, I think it's really a case of markets moving much more rapidly today than they have in the past. Really, the COVID speed that I've talked about, markets are discounting mechanisms and moving aggressively. And when you look around the world, European banks, even after the move, John, are still very, very cheap. European beats in the last quarter earnings were the best in a decade. Yep. The best in a decade, John. So companies have been able to work through the lockdown process. And when the consumer comes back in Europe, that's going to help the rest of the European equity market. And I'll give you one last sentiment indicator, John. Morgan Stanley held its European Financials Conference last week, virtually, of course. Attendance was up 50% year on year. In U.S.-based investor participation was up 100%. This trade is just the beginning. We're at the second or third inning, maybe the fourth inning of the European bank trade.
I love a selective anecdote to support the trade, Jay. Love it. Jay Pawlowski there of TPW. Great to catch up, mate. The banks have delivered for Jay, up 18% in Europe on the year so far. A little bit earlier on this program, about 10 minutes ago, I brought you some breaking news around the US and its allies and some Politico reporting. I want to touch base with our chief Washington correspondent down in D.C., Kevin Cerulli, to update us on that. Kevin, what are you hearing? What's the latest?
Well, good morning, Jonathan. And just in the last several minutes, Politico reporting that the United States, Canada, Britain, and European Union allies will all issue sanctions sometime later today against China for what U.S. officials have called genocidal actions against the Uyghur Muslim minorities in the Xinjiang province of China. We mentioned earlier this morning how the rhetoric from Secretary of State Tony Blinken's travels to Alaska last week to meet with Beijing counterparts was likely to continue into this week. Well, here you go. And this is just the first step, the economic sanctions components likely to be made against unique individuals in China for their involvement in this. But it's the first step that they could take, but no doubt just the first step in what is surely to be a longer road ahead.
Kevin, any idea how targeted those sanctions would be?
Not yet, but once we have those developments, and they're likely going to start micro-targeted and then expand. That's what we know.
Okay, Kevin, stay on top of it. No doubt you will. Kevin Cerulli there, down in Washington, D.C. Up next on this program, the market-moving events you need to be watching. That'll be next in our trading diary. And here's a hint. Chair Powell, Chair Powell, Chair Powell, and a ton of Fed speak in between. From New York, this is Bloomberg.
can somebody remember things that happened 80 years ago? How do you do that?
David, it's easier to remember 80 years ago than what I had for lunch today.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
"25 minutes in, session highs on the S&P 500 up 0.4%. Your underperformance on the Russell, your outperformance on the Nasdaq up by almost 1 full percentage point. Yields come in. Bull flattener, 10-year comes down 2 basis points, 30-year in about 3 basis points, 170 almost on 10s, just south of that on a 30-year, around about 240, call it 241. That's the equity market and the bond market together. You're familiar with that story. Here's your trading diary. What you need to be watching through the week ahead: a ton of Fed speak, including Fed Chair Jay Powell and Treasury Secretary Janet Yellen testifying before Congress on Tuesday and on Wednesday too. On Thursday, it's Vice Chairman Rich Clarida's turn, plus President Biden holding his first formal news conference, some much-needed Q&A with the administration a little bit later this week, plus $180 billion in Treasury auctions throughout the week, including that important 7-year issue a little bit later this week, and rounding out the week on Friday with U.S. personal income and spending numbers as well. From New York City, for our audience worldwide, this was the Countdown to the Open. Continue the conversation on Twitter at Fero TV. This is Bloomberg.
Model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He's all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
Kenny, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
Okay, guys, well done. As you can see, we closed trade on Bitcoin. All of you who follow this trade, you made quite a decent profit. In our case, we made £500. So in your case, it's all about how much profit you decided to make if you will be in 0.5% in difference in profit. Okay, a good trade, everybody. Well done. If people doesn't know how it's happened, why we decided to enter the trade at that level, you need to purchase the strategy, you need to get a strategy, and you will understand, right? If you won't invest, you will not make any money. Okay, good trade, well done. I'll speak to you later.